Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch this week. I'm Zinati Guma, and join me to unpack your stock-related questions today via Zoom are Sanelisiwe Tofile from All Weather Capital and Rowan Williams from Nitrogen Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or an X at Business Day TV using the hashtag Stockwatch. Thanks for your time, gents, on this lovely Friday, in which half of the population is on holiday, but it's fine, we have to work. Suddenly, I want to start off with you with a question on the Rand, because this has been a very fascinating thing to watch over the last couple of months. I do note that it has weakened a little bit from about 17 Rand 32 now standing at around 17 Rand 45 against the US dollar. The question is, where do you see the Rand dollar by mid-October this year? I don't know if you can see that far, but just talk to me about the trajectory that we've seen in the Rand so far.
Yeah, look, it's notoriously difficult to forecast currencies, the Rand especially. But I mean, look, we've had sort of reasonable amount of Rand strength in the past few weeks. I think it speaks to a few things. I think one of the things is probably a good sort of correlation with the demand we've been seeing in the resource stocks. I mean, whenever there's good demand for the resources that come out of these companies, then you do see some Rand strength coming in with it. I think the other thing is probably a relative with the US, where the US cut rates, where we kind of stood where we are. So that kind of also kind of probably supports the Rand. And then a third thing, I think maybe at the margin, an improvement in sort of sentiment towards South Africa. One thing to note is that it looks like the grey listing story is coming back to the headlines, but in a positive way, as we're kind of meeting all the targets there. So that might improve sentiment towards South Africa. So a few things are maybe going the right way for SA Inc. and the Rand.
Yeah, it's quite interesting because, I mean, you mentioned things happening domestically, also the resources, but also the dollar weakness as well. So seeming that it's just a perfect confluence of good things coming together. Your thoughts on what we've seen in the Rand, Rowan? I mean, was this something that was expected at all this year, that we'd get to these levels?
Yeah, I think it has surprised a number of market participants, the Rand strength. What we have seen is quite significant dollar weaknesses, as you pointed out. So against the other major crosses, the pound or the euro, you've seen less strength, although recently that has the Rand has started to appreciate there as well, which I think, sort of as we alluded to, speaks to the strong terms of trade. What you're seeing is a lower imported oil price, higher exported resource prices, particularly the precious metals, gold and platinum at 12-year highs. So that helps our current accounts and our balance of payments quite significantly. So that, I think, has also been the key driver of Rand strength. Interestingly enough, the domestic economy has actually been quite flat from a GDP growth perspective. But we have seen quite significant bond strength as well. So that has helped and attracted inflows as well to the currency. So those things taken together have strengthened the Rand. And I think the irony is that sort of all the Trump policies have been very pro-precious metal prices, which have actually been pro the Rand. So that, I think, maybe people didn't see through that or the consequences. And so that has been quite surprising, but I guess a pleasant surprise.
All right. Well, something that has pleasantly surprised investors for a long time is gold. There's a specific question on DRD gold, sell or not at 46 Rand. I do note that it's up 2% as we speak. And actually, even though we did get a sense earlier on that Van Eck Associates Corporation has offloaded some of its shares in DRD Gold. Someone said that there might be a rebalancing thing. But at this point, considering how far it's run, Sanelisiwe, sell or not at 46 Rand on DRD Gold?
Look, I think the underlying metal price, the bullion price, is still supporting a lot of these names. Obviously, gold is quite a very macro-driven type of indicator or resource. So if you're looking at the balance of what's going on globally and the kind of risk off that catalyzed the rally in the gold in the first place, I don't see a lot of those things easing in sort of in the short term. And then on top of that, you still got central bank buying as people move away from. Well, I don't want to say moving away from the dollar as the reserve, as a reserve, but they certainly are diversifying their reserves, and gold is one of the things that's been picked up. So there's a lot of support for gold. So the underlying shares, DRD, all of them, even the smaller ones, Pan-African, whatever you want to call it, they're all still being supported by the underlying gold price. So I don't know if it's necessarily the right time to sell.
Okay, yeah, macroeconomic environment still supportive, but that's the thing. Investors in the market get itchy feet when there's been too much of something, whether it's selling or buying. So Rowan, at this point, I mean, are the itchy feet valid?
Well, obviously there are a number of holders that have made significant gains. So I think you're going to constantly, as you mentioned, see some rotation as people sort of rebalance, and maybe the strong moves, and certainly in the JSE, if you look at the precious metals stocks versus the balance of the shares on the JSE, they've far outperformed, sort of like orders of magnitude. It's been a very unusual market from that perspective this year. So, but you're seeing significant momentum in these stocks, and momentum has been one of the key positive factors that have driven stock price performance. And as Sanelisiwe said, the macro environment doesn't look like it's changing in the short term, and that's been the key driver of gold and the demand for gold. This increased uncertain environment. I think what we've come to expect and agree with from a Trump presidency is there's heightened uncertainty and there's constant uncertainty. New policy sort of pronouncements sort of daily. I think some of the geopolitical actions are sort of less certain. So what is their relationship with Russia and the UN and sort of bilaterally. So those are all questions that we're sort of unsure about, and so heightened uncertainty, gold remains a hedge. Demand is underpinning it. So I agree. I think it remains a hold, both gold and platinum.
Okay. All right. Very, very interesting. Well, let's get into consumer-facing stocks, starting off with Sun International. And this is in relation to Tsogo Sun. It has been announced that Tsogo Sun will build a new casino in Somerset West. Up to now, Sun International has had a monopoly in the Western Cape with its Grand West Casino. Question, is that reason enough to sell one's Sun International shares? How? But, okay, fine. Sun International, I get they had a monopoly in the Western Cape, but also Somerset West compared to the rest of the Western Cape. I don't know, wouldn't this be a small thing for Sun International and Sanelisiwe?
Yeah, look, I think with these type of things, location probably does matter. And I think also, again, like you say, it's a matter of kind of introducing a second player in a kind of monopolistic environment. I don't think necessarily that it's going to be all that negative for one player or the other, because if you look at where some of the stats are showing, gambling has actually increased quite a bit in sort of recent past. It's usually a signal of tougher times elsewhere in the economy when people start to gamble a lot. But be that as it may, gambling is sort of still the one, I don't want to call it a staple, but something that's kind of sticking around. And online gaming as well. I'm not sure which company is more exposed to those things, but online gaming as well is kind of coming up in demand as well. So I think if you are positive in these names, then you probably still want to hold.
Yeah. Rowan, holding Sun International in relation to this new exposure that Tsogo Sun does have in the Western Cape. Yeah, what do you make of that?
Yeah, so I think at the margin there might be a small number of gamers that sort of they lose their Sun International loses to the new casino. So, but importantly, that radius is now only 30 or 35 kilometers Grand West, still has exclusivity over. So it's still very significant. I think Somerset West is somewhat of a different market to the Cape Town market, and it's still a very strong property Grand West. So we don't see it having a significant impact. From Sun International's point of view, yes, the key attraction there is their online gaming business, which is growing significantly faster than the land-based casinos. So, and that's where they're capturing, I think, where gamers may be moving from land-based to digital or online. So that trend remains intact. The actual share price performance recently has been somewhat disappointing off the back of the results, and maybe this news flow that people are a little bit concerned about. But I don't think it's particularly concerning, and it's actually starting to look quite attractive at these levels again, Sun International.
All right. I mean, actually, just quickly on Tsogo Sun, I get that obviously there's still a bullish case for Sun International. Sanelisiwe, would this make you look at Tsogo Sun, this new exposure to Somerset West?
I mean, short answer, yes. And also, just bearing in mind that it has underperformed the rest of the peers in the sector, I think it's one that could be interesting.
Okay. On your side, Rowan, Tsogo Sun?
Yeah, I think they've just got significant land-based casino exposure, and they haven't been able to hedge nearly as much as Sun International by having an online gaming. They do have an offering, but they don't really have any market share.
Yeah.
So we still have a strong preference for Sun International over Tsogo.
All right. Actually, I think this viewer has sent a similar question before, and I think they maybe want as many insights on this as possible. It seems the viewer is also getting itchy feet on Boxer. Seems Boxer has taken a big knock on its share price. Is this a failed IPO? Should I cut my losses and bail out? I think the viewer is looking for someone who will say you can go, but I think everybody has actually said, why leave? Rowan, your take.
Yeah, the IPO itself was very successful. I think what may have happened is there was quite a lot of hype around the listing and the growth prospects for the business. The share did run very hard. The free float is quite small, and potentially the viewer or the investor may have got in like late, as in they sort of paid more than the current share price. So I think at sort of over 70 Rand, it was probably discounting all of the potential sort of in the near term in the business. So the growth prospects do look very exciting. The lower end retail sector has been strong, and I think it will remain strong. So the fundamentals for the business are good. So then it comes down to valuation. And at current levels, I'd probably be a holder because I think it has sort of it's eased up a bit and come off. And so it does start to look quite interesting here because it does have a 5-year store rollout strategy, and it is getting the market penetration, very good sort of consumer uptake. And we do fundamentally like the business. So at the right entry price, we would be back into it.
Yeah, that's the thing, because I mean, I was also thinking the fundamentals are quite supportive. So quite interesting that maybe investors did get ahead of themselves. And even now, I had an interview on the FNBBR Consumer Confidence Index, and it was actually saying that the low-income consumers are actually doing okay. Their confidence is up also because they got, the above inflation increases in the social grants. Sanelisiwe, your take on Boxer, and particularly looking at its valuation at this point as an investor who's been there since the beginning.
Yeah, look, you might quibble around the valuation over the short term, but I think long term, it's still, as Rowan said, there's a clear growth path as opposed to some of the other retailers that you've got, maybe with the exception of a ShopRite. But there's a clear growth path. It's targeting the right kind of consumer segment, the kind of lower end, which tends to be more robust when it comes to like food and stuff like that. So I think it's a bit too early to be calling a failed listing. It only listed in October or November. So, it's I don't think it's a failed listing. I think it's a good business with good fundamentals, good returns, good ROEs, everything is kind of pointing in the right direction. You might maybe quibble about the valuation, but again, if you, depending on the time horizon, you might want to maybe hold on to this one.
Okay, yeah, you're right. It has only been, a little less than a year since it listed. Okay, so there's an interesting question here. It has a whole range of stocks. The viewer says on Easy Equities, there's this basket called Monthly Dividends Basket, which consists of these companies. So the viewer names them. I'm going to name them right now. What do you think about these companies? One thing that I know is that every month one of them will declare a dividend. But are they good companies to invest in? A whole number of them. Of course, we don't have to go through all of them. Maybe pick out 1, 2, or 3 that maybe are interesting to you. So there's BAT, Anglo American, Netcare, Shoprite, Exxaro, Kumba, Clicks, Vukile, Spear Property, Sibanye Stillwater, Discovery, and Cop Agri, which is now Cal Group. I don't know if there's anything that has stuck out for you there, Rowan. Maybe 2 that. Yeah.
Yeah, so I think, so it's an interesting mix because you've got some mega cap stocks and then some sort of micro cap stocks.
Yeah.
I'm not sure if they sort of pick because they pay dividends in different months, which would kind of create a smooth monthly income, but I guess also the actual yield. So, sure. Look, we like Carp Agri. I think it's in an interesting space. It's very cheap because, and it's sort of exposed to convenience retail, which I think is a growth factor. It also is exposed to the agricultural cycle, but less so. And that actually has been fairly good recently. The share price has come off, so that's sort of yielding quite high. The commodity stocks, we think their dividends are more volatile. So if you look at the trailing dividend, it's not a great indicator of future dividends. So they screen high for dividend yield, but are not necessarily attractive. Coal prices have come down, iron ore sort of been up and down. But Kumba is quite interesting just because it's got so cheap. And the yield is very high. It's underperformed iron ore, its basket. So we think that one actually is interesting, notwithstanding some volatility sort of in the earnings. And then, like I guess a stalwart, like maybe something like British American Tobacco, sort of on the dividend yield and sort of hard currency is quite interesting as a hedge. So that would be kind of like quite diversified pick of the 3.
All right. Okay. BAT, Anglo American, Netcare, Shoprite, Exxaro, Kumba, Clicks, Vukile, Spear, Cop Agri, Sibanye, Discovery. Your picks there, Sanelisiwe.
Because I feel like Rowan must have talked about all of them. I'm not sure what to pick here now. Yeah, look, we still do like the resources. There's still a bit of, as we talked about earlier, momentum around those names.
Yeah.
But again, I think really the key thing about this basket, it is a dividend basket. So you have to kind of keep in mind that probably changes around depending on which companies are paying dividends in the near future. But we like commodities for the reasons we talked about earlier. I think, quality names like ShopRite and Clicks will always, come up in the discussion. Yeah, so those kind of companies are probably kind of decent to still hold on to.
All right. Well, there's a question that just came in, and it is on Mondi. Is it time to nibble into Mondi? I was actually talking about it with 2 analysts yesterday, and one of them was concerned about how long this downward cycle would be for Mondi, and they're not really sure if this is the right time, if you should ride it out. Yeah, Rowan, your take on Mondi?
Yeah, certainly the share price performance has been disappointing. I think it has been quite a challenging operating environment. We haven't seen the demand, particularly in Europe, sort of pick up as anticipated. So the near-term earnings were actually quite disappointing. The share has sold off, and I think sort of on medium-term horizons, the valuation does look quite appealing here. Decent dividend yields. They've been doing a lot of sort of accretive capex that should come through from an earnings perspective sort of now in the short term, and that sort of maybe weighed on the performance up until now. So we think it is quite an interesting entry point. It is a quality business. I guess you can't expect economic growth in Europe to get too much better. It's sort of unexciting sort of But notwithstanding that, I think on a valuation basis and quality, it screens and is worth a consideration.
Yeah, suddenly so too cheap to pass up, or maybe just too uncertain for you?
Probably sit in the uncertain camp right now. I think Rowan's covered all the points, but maybe one thing to add is that, historically it's been a good cash flow generator with a quite healthy balance sheet, but the gearing has moved, I'd say in probably the last 5, 6, 7 years from like a 1 times number, 1 times EBITDA to probably closer to 2 times now. So that also does put the dividend at risk when you think about where the debt has come up to. So I tend to be cautious on this one, if I'm being honest.
Okay, all right. Well, how much caution is there on the pharmaceutical side, just before we get to your stock picks? Because Trump has obviously now, he's imposing this 100% tariff on pharmaceuticals. We saw Aspen reacting yesterday, not so much today. How much risk could there be, particularly for a counter like Aspen, Rowan, which is also dealing with internal struggles?
Yeah, so it looked like the tariffs were on branded drugs, 100% tariffs. And interestingly, what we're seeing is those major drug manufacturers, most of them have manufacturing operations in the US. So the market is expecting that those big players will actually get exemption because they have US domestic manufacturing operations, and actually becomes positive for them if their competitors that don't have local manufacturing operations do subject to those tariffs. It increases their competitive position massively. So the big players, Novo Nordisk, we haven't actually seen them sell off. They have already been significantly impacted by other tariff pronouncements around pharmaceuticals. So the market's shrugging this one off. I think the Aspen sell-off is actually more related to SA Inc. sell-off and Aspen specific issue as opposed to this tariff announcement.
Okay. Very, very interesting. But I mean, a lot of people have been asking then, because of the downward movement that we've seen in the Aspen share price, is it a buy, Sanelisiwe, or is there just also too much uncertainty there?
Yeah, I think the only thing to add to what Rowan has said is I think over time, what investors are probably have become disenchanted with is a bit of a moving target on the expectations. The company has set targets for some of the capacity around the operations and meeting those targets, and the cost guidance and everything else, and the production guidance. But it's been slowly eroded over time, and now the expectations are being lowered. And I think the reaction is probably right if you think about where the earnings might be given the lower kind of production targets.
Right.
So yeah, I don't know.
Okay, yeah. All right, gents, let's get to your stock picks for today. What are you choosing, Rowan?
So, in line with what we chatted about earlier, we're picking Pick and Pay. So what we see it is a discounted entry into Boxer, essentially. The share price of both shares have come off quite significantly. Pick and Pay has become a bit of a trading stock because it sort of moves around based on expectations for the rump. I think we've seen food price inflation's expectations come down a little bit, and that's one of the reasons for the sell-off. But I think the medium-term prospects for the Boxer business still look particularly good. That is by far the bulk of the value inside Pick and Pay. But on top of that, you do get optionality around turning around those Pick and Pay operations. And I think the management team is doing a good job, and they're cutting a lot of the dead stores, converting those to Boxer, or otherwise fixing them up or closing them. And so you'll have a smaller, profitable business, and coupled with your entry into Boxer. So at these levels, it looks pretty interesting.
All right. Well, what looks interesting to you today, Sanelisiwe?
So our pick is Remgro for today. They released results earlier this week. You saw quite meaningful improvement across some of the businesses in their portfolio, good contributions from the likes of Heineken from loss-making positions to improving that, Outsurance, Discovery, all kind of coming in positively. You've got a massive kind of increase in the cash flow, good dividends coming in from Outsurance and a few of the other ones in the portfolio. Cash position has moved from a debt position a couple of years ago to now 8 billion of cash. It's doubled in the period. And they also issued obviously an increased dividend and then a special dividend on top of that. And then when you consider the fact that they sold their BTI stake as well as receiving the cash from the CIVH deal with Vodacom, there's a case to be made that the cash position might be even greater at the next reporting period. So optionality on further dividends or capital distributions, or obviously making some deal sometime in the future. So discount is trading sort of at a 40-ish% type of level versus a historic sort of 25 to 30 level. So good margin of safety as well. So yeah.
Okay. All right. Well, thank you so much for your time and for your analysis today, gents. Really, really appreciate it. And do enjoy your weekend. Thanks to my guests, Sanelisiwe Tofile from All Weather Capital and Rowan Williams from Nitrogen Fund Managers. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep sending your questions. For now, that is all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.